Hello everyone. In this video, I will be talking about credit risk for financial institutions. Credit risk arises because of the possibility that promised cash flows on financial claims held by financial institutions, such as loans or bonds, will not be paid in full. Virtually all types of financial institutions face this risk. However, in general, financial institutions that make loans or buy bonds with long-term maturities are more exposed than are financial institutions that make loans or buy bonds with short maturities. This means, for example, that banks, building societies, credit unions, and life insurance companies are more exposed to credit risk than our money market managed funds and general insurance companies. If a borrower defaults, both both the principal loan and the interest payments are expected to be received are at risk. As a result, many financial claims issued by corporations and held by financial institutions promise a limited or fixed upside return or upside potential with a high probability and large downside risk with a much smaller probability. Good examples of financial claims issued with these return risk trade-off are fixed income coupon bonds issued by corporations and bank loans. In both cases, and financial institutions holding these claims as assets earns the coupon on the bond or the interest promised on the loan if no borrower defaults occurs. In the event of default, however, the financial institution earns zero interest on the asset and many loss all or part of the principal lent, depending on its ability to lay claim to some of the borrower's assets through legal bankruptcy or insolvency proceedings. Accordingly, a key role of financial institutions involves screening and monitoring loan applicants to ensure that financial institutions managers fund the most creditworthy loans. A credit risk can be divided into two categories: firm-specific risk and systematic credit risk. Firm-specific risk means the risk to holding the bonds or loans of a particular firm, and the credit risk that arises for a reason which is specific to a particular loan or a particular borrower. On the other hand, financial institutions exposed to systematic credit risk, such as factors that simultaneously increase the default risk of all firms in the economy, such as an economic recession, like global financial crisis, or like the COVID-19 situation. That's all my discussion about credit risk. Thank you very much.